I'll give you some case studies too. So recently, there's a lady 4 years prior had a stroke in her 30s, and she had dealt with other insurance people, and they couldn't get her insurance because they were going through the traditional system. We were able to get her through the hard insured programs, which all advisors don't offer, $500,000 of coverage. So she was extremely happy with that, because as she states, I was the only one that's ever able to get her coverage. So that's a case study of someone getting coverage that they couldn't. One of my clients were able to get them insurance, and about 6 years later, she got breast cancer, and she eventually passed away from it after fighting for a couple of years. And so we were able to pay her husband. We did the planning and able to pay off the mortgage, have money set aside for her two children to go to college and replace her income. And his children moved back to Montreal. So they're able to do all that stuff. Three things you want to look at is life, disability, and critical illness. Now, if you are working at a job, you probably in the benefits there, you're gonna have disability coverage. Personally, you're looking at life and disability. A young person, you can get $1 million of life insurance for like $40 a month or something like that. Really inexpensive. Less than you going out and having a few drinks on the weekends. Critical illness, the average age someone claims is mid-40s, but there's been a lot of younger people that have gotten cancer recently. 4% of people right now in Canada will get cancer by the time they're 70. Are you more likely to have a critical illness or to die? Probably critical illness. The odds are for sure. That's why life insurance is so inexpensive at your age. So should you have both? Probably. It's up to that individual to decide which way they want to go, but it's cheaper than buying a pizza every weekend. If you're concerned about your loss of income, you're going to want to have disability coverage, because disability coverage covers anything that stops you from being able to work, whether it's injury, illness, accident, sickness. That's covered. One, we're going to look at a budget, but two, we have to look at what are your goals. What are your important goals, short-term, mid-term, long-term? Like, what are your goals? And look at your budget and then put things in place. It's not always the ability to do everything at one time. So we have to add things in over time as time goes along. So it's what is the priority? Start with those and build on future things. Probably want to budget 10 to 20% of your income into all those things. Foundation are things that have guarantees, like life insurance, more conservative investments, different things like that, yeah. And insurance has guaranteed premiums, a guaranteed death benefit, disability, critical illness, has all those types of things. You can get investments that have guarantees. You can guarantee a portion of your principal into the stock market, things like that. GSCs, or the savings account, if you're saving for a house or whatever, you don't want to have that kind of money in the market if it's a short-term savings, because the market goes down 50%. It can take a while to bring that back. So you want to have different foundational products, and then you move up the step into the more non-guaranteed things, but potentially have a higher return over time. Like when you're in the stock market, like mutual funds or even seg funds, those are not short-term saving products. Over time, you'll make more money in them. In the past, you have. but you can't depend on them short term because the day after you put your money in there, the market could drop. These homes that don't have basements and there's a rainstorm and their house slides down the hill because there's like no foundation there, right? When you're building your financial pyramid, yeah, foundation, and there's so many different things and different opinions. Buying a house may not be your foundation right off the bat, but because if you don't have, let's say, disability coverage in place, you buy a house and you get sick and you can't work, your house is gone, right? So that's not a foundational thing, but disability insurance is, because it would help you keep the house and other things, right? So I guess that's the difference between foundational and non-foundational is in the unexpected bad times like a flood, it's still there, right? Financial crisis, foundation's still there, okay? We have a bunch of different products to use for retirement planning, RSPs and investment programs and stuff like that. So it's a matter of a combination, a portfolio of different things. So you're not going to use insurance for everything. You're going to use insurance in conjunction with other things. So that sets up long-term planning. In terms of insurance for a younger person, are you likely to die at your age? No. Do young people die? Yes. Do we know if that's going to be you or not? We don't know. If your number one goal is retirement planning and you want to retire at a certain percentage of your income, we're going to project that down the road with inflation, and it's going to tell us how much you need to do based on a conservative rate of return to have that lump sum of money that's going to pay from when you want to retire. Let's say it's 60 to 90. What lump sum do we need? And what do we need to do today to get to that lump sum? So that can help allocate your retirement savings. And then we would look at having insurances in place. And sometimes, it's a shorter term program, like a 10-year program, because we have to fit into a budget. Sometimes it could be a longer term program if you have a bigger budget. How much critical illness we put in place depending on your budget. A disability, if you have it through work, maybe that's enough for you to have that. If you have a mortgage, maybe you want to have disability on your mortgage. We have to work that into your budget. And if it can all fit into your budget, great. If it isn't, we have to make some decisions on priorities, right? And then maybe 3 years from now, you can add those things on